What's up, everybody on the internet? This is John on the internet. Hope all of you are having a fantastic Monday. It is already past noon.
I'm 8 now.
She's 8, just so you know. That's a big deal, becoming 8 years old, because when you turn 8 years old, it is the last time you ever turn 8. And I don't know where I'm going with that. But the point is, hope you're having a great Monday. I just want to spend a brief moment talking about venture capital today. That is the topic of the day. I should probably make a jingle. Maybe we should make a jingle. The topic of the day. Maybe not. Maybe that would be a terrible idea. Anyway, some of you have been asking from my last video. I mentioned that I'm going through the process of raising some venture capital, some money to finance my company. And a few of you asked, hey, what is that like? You know, what does that look like? How does that feel? Yada, yada, yada. And I thought I would just talk about it in general, kind of in generalized terms, and give you a little bit of an idea of what it's like to raise venture capital. I'm going to actually sit down because I'm a little bit tired. I used to do a lot of these vlogs on the floor, and here I am on the floor again, hanging out with my 8-year-old. My Geek Heat space heater, and you see my sparkly toes.
Look at my sparkly toes.
Look at those.
Mine.
Oh yeah. Sparkly toes. Those sparkly toes are actually from our Hawaii vacation. I had like 3 layers of what are those called? Nail polish. Nail polish. There are 3 layers of nail polish. It is a new tradition. When the family goes on vacation, we spend the last day painting each other's toenails and fingernails. Anyway.
I only got one later.
Yeah. So, raising venture capital is a very interesting, fascinating process. And the first time I did that was many, many years ago, and I totally botched it. Actually, I don't even think I was fully aware, if I'm to be honest. I don't think I was, that sun. I don't think I was actually fully aware that I was actually in the process of raising money for my project. And so, as you might imagine, I messed up everything. And I had no idea what I was saying, what I was doing, what I was even asking for. And I kind of stumbled through it. Long story short, I actually did end up raising a little bit of money. I got a grant from the town, one of like the towns in Atlanta. One of the local municipalities had like an accelerator. I don't know why they called it that, because there was nothing even close to accelerator, but I ended up raising a little bit of money, and it helped me push that company kind of to the next level. But all that to say is, over the last decade, I've spent an incredible amount of time learning about venture capital, learning how to do it right, learning the right questions to ask, learning the process and the workflow. I've read a ton of books. There are a lot of great online courses, one by Kaufman, which I hope I'm getting that right, that is entirely free, and that I've actually recommended to my team to actually take. It's based on the Venture Deals book by Brad Feld, which is fantastic, and Jason Mendelton, I believe. But Brad Feld, he wrote that book. I think it's on its 3rd or 4th version or iteration or revision or whatever. Totally recommend that you get it. It's essentially like the Bible for raising venture. Although it's not like, there's so many different ways, but is one way of doing it, and I think is a really good way. All that to say is, anyway, so we're in the middle of raising a little bit of venture, and one of the things that I didn't realize when I first started was I was told that raising venture capital was a full-time job. And I think when the first time I heard that, I nodded my head, and I was like, yeah, that's cool. I totally get it. I didn't really get it. But I mentally assented that, okay, that's cool. and I guess I'll have to change a lot of my day and week and schedule to figure this out. It was only actually when I started seriously raising venture capital for one of my projects where I realized that is actually true. So I think that's the first thing I wanted to communicate, is that when you decide to go raise a round of capital for your project or for your business or whatever, you literally have to shift all your time and attention to raising. And here's why. It's not that you can't multitask or kind of divide your calendar up into maybe operations or engineering and venture capital, et cetera, et cetera, et cetera. It's that when you actually start the process, it is so emotionally taxing that the cost of context switching becomes invariably high. And you, after 5 or 6 meetings per day over 3, 4, 5 weeks, 6 weeks, maybe even longer, you're just so exhausted all the time. And so the thought of, after having taken 4, 5, 6 meetings in a single day, and then getting back to your workstation and then writing some code or doing some marketing or whatever your other role was within the company, you literally you hit there's a ceiling to the amount of mental energy that you have during any 24-hour period, and you're just totally baked. And I really, and from what I gather from talking with many other my peers and my friends and other entrepreneurs who go through the process, regardless of what your personality is, regardless of your workflows, regardless of how much of a hustler you might be, or how much energy that you might have, or if you're introvert, extrovert, all of those personality differences, all goes out the window, because it is such an exhausting process. Because you're meeting with these people, you're having intense, serious conversations about the livelihood and the existential, the existence of your business. So there's a lot on the line. There's a lot of pressure. You're prepping before the meeting, doing an incredible amount of research and diligence into the people that you're talking with, trying to get their backgrounds, trying to understand their personas, trying to understand their investment theses, if they have one that's obvious. I spend a lot of time reading all of their blog posts if I can. I go way back into the depths of their Twitter archives or maybe their Facebook status updates. I go and listen to all the podcasts that they've been on and the episodes. I watch their YouTube videos. The point is, incredible amount of diligence on my side, because I want to know, as best as I possibly can, who this person is, what makes them tick. How do they really think about investing? And can I reverse engineer or somehow grok or understand a little of their behavioral dynamics when it comes to making very key decisions? Because if they're an angel investor, they may make a handful of investments a year, maybe 5, maybe 10, all very, very, very different. But if they're an institutional investor, it means that they are representing a firm, or they have started a firm, et cetera, they may make 1 to 2, maybe 3 investments a year. So they have to make 1 or 2 seriously critical decisions for their portfolio a year, and they may take 1,000 meetings during the year, right? So it's less than 1%. It's 0.1%, right? And so the likelihood of them making an investment on your project is very, very low. And a lot of that has to do with how you're going to actually interface with them, and if it mutually resonates on both sides of the equation. So they do a ton of diligence, I do a ton of diligence. So this is happening for every meeting. Again, you might have 4 or 5 of those a day. And then after those meetings, there's follow-ups. There's a ton of administrative work. They may have asked for more information about specific parts of the business, which I need to go get if I don't have at the ready or that's easily accessible. I may have to ask my team to do a little bit of work and throw things together, charts, data around our accounting and our finances, our projected business models, our engineering workflows, our roadmap for the product, go-to-market strategies, like all of that. There's so much work. It's very much team effort. And that's for just single meeting, right? There's pre-meeting preparation. There's the actual event itself, which if I have to travel, which is, you want to try to meet these people in person if you can, over the phone, and Google Hangouts and Skype chats, like those are okay. Nothing better than actually just meeting them in person, sharing a coffee, like really getting to know them. There's a lot of implications of why. Gosh, we could talk about this for ages. You have the meeting, you travel, you have the post-meeting requirements and administrative tasks and responsibilities. And then you got to do that 4 or 5 times a day. And so by the time, again, you get to the end of the day, I'm totally wiped. Again, regardless of how much energy you may natively or intrinsically have, you're just totally wasted. And the last thing you want to do is actually do any other work. And so the point is, I didn't know this. I didn't know this until I actually started raising venture. It's an exhausting process. And that's just when I'm intentionally putting a round together and trying to herd the cats toward a very specific close date. And I don't want to get into too many specifics, but the idea is you're trying to corral a bunch of these disparate parties that are not talking together, and you're kind of in the center of the wheel, right? And so you're trying to make sure that everyone has all the information that they need, very strategically, very selectively, and that you're trying to move everyone down the funnel toward a specific date to collect all the signatures, and then you start acquiring checks and wire information so they can send you all this cash, and then you're done. And that can take, again, it could take a few weeks if it's kind of earlier in the process or early in your project's life cycle, like a pre-seed round or seed round. For instance, my pre-seed round for this project, we were able to pretty much move the entire process from start to finish in about 5 weeks, maybe 6 weeks, just on the cusp of 6 weeks. That is a very quick process. Very grateful for some incredible folks who financed the first round. And now we're working on our seed. So we did a pre-seed, our seed, and we're raising even more money. And the process is moving actually very, very quickly due to a number of things. Mostly because we've got some existing investors who are super bullish on what we're doing. They're super excited about what we're doing, and they want to double down or double up on their existing investment and ownership of the project and the company. And so getting them to agree to certain terms and commit sizable checks has been really, really fortunate. But anyway, so the point is that every fundraising process is very different. But at the very least, plan for a complete emotional roller coaster. And that's really, again, outside of the administrative tasks and the quests for information and the diligence, which again, tons of time, the emotional cost, emotional and psychological cost is very, very high. I am going to bed early, really because of it, because I'm so tired during the day. And of course, I'm just like anyone else. I do a lot of work in addition to the actual process of trying to raise the venture and the money. So it's a super, super long day. So that is generally what the process kind of looks like day to day. Having these meetings for 3, 4, 5, 6 weeks, whatever. Lots of them, lots of administrative tasks, lots of stuff to send, to receive. I'm also trying to corral my legal team and make sure that they have all the information about the round, about the valuations. There are things like 409 evaluations that have to be done every year, typically. There's so many things, and if you're trying to reform or do anything with the business structurally, like around stock options, there's so many different things, and I had to learn all of these over the many years after having messed it up so badly. And I'm not an expert either, even today. So hopefully it gives you a little bit of taste of what I deal with and I'm dealing with right now as we work through this process. It's not fun, but it's necessary, and I'm very grateful that we have great investors to do it. And there are moments where I actually do enjoy the process. More importantly, I do enjoy making great relationships with great people who are really smart. And so the conversations are actually quite fun. If you have any more questions about that, of course, feel free to ask in the comments below. And hopefully I get to share a little bit more of the process as it's ongoing. Because one of the things that you don't actually hear a lot about is you don't get to see and hear about entrepreneurs raising venture while they're raising venture. And that's because so much of raising venture capital is a black box. I think that's really sad. I think part of our job as entrepreneurs, I think part of our job as part of our opportunity, I think, as entrepreneurs and I think venture capitalists is to really open the book a little bit more wider so more folks can understand this somewhat arcane art, if you will, of deal making. Again, I'm not the best source of information or of wisdom here, but I think it's my job and opportunity to share a little bit more about that so more folks can learn about it, can understand it, and then maybe participate in this ecosystem because it's quite fun, right? I mean, who doesn't appreciate someone else paying for all of the hard work that you're doing instead of me paying out of my own pocket? So that's kind of nice. Anyway, hopefully that is of use. It may not be, but I just want to give you a little bit of a more a clearer picture of what my day looks like. I got a bunch of very important meetings this week. Here in the city and then down south in Palo Alto and Menlo Park. And hopefully I can take a little bit of video on that maybe this week. Anyway, love you guys. Very specific vlog today. Hope you guys are having a great one. We'll sign off now with a video, a picture of my unicorn wrist rest because it's so legit. I am actually really liking this guy or gal. I'm not entirely sure if it's gal or maybe it's genderless. It's a genderless unicorn wrist rest, I think.